welcome to the Rust Belt Real Estate Podcast. I'm your host, Peter Grealis with Colliers in Cleveland. My guest today is Charlie Filisko. He is a Senior Vice President of Business Insurance and Surety at Marsh McLennan Agency. He's a graduate of the University of Kentucky. He's an active board member of both NAIOP, which I believe is where we both met, in the Insurance Industry Charitable Foundation. He's also an active member of the Associate Builders and Contractors, Ohio Contractors Association, and Real Professionals Network. In his free time, if he has any, Charlie passionately volunteers with local aging services, nonprofits, and various public goods as opportunities arise. I'll leave his introduction with this fantastic quote that his team had sent over. Commercial insurance buyers are at the mercy of external factors that can substantially impact their relationships. My approach is to strengthen my clients' risk management strategies, thereby increasing their control in their financial futures. Charlie, wonderful quote. Great to have you.
Peter, thanks so much for having me.
My pleasure. For some of our listeners who don't know, just perhaps a quick elevator pitch on Marsh McLennan and what you guys do, big picture.
Sure. And big picture is probably the best word for it. We are largest insurance brokerage in the world. Our parent company, Marsh McLennan Companies, handles, I believe the stat at one point was like 96% of the Fortune 500 in some capacity, whether consulting through benefits, broking, reinsurance, something along those lines. So we typically, up until about 2008, were specifically in the very large space. Now, having seen, I think, 6% of the entire middle market had, I think, in terms of centralized market share, 6% was in one. So we saw the opportunity and took it. And Wonderful. Now, on our own, MMA is a top 5 in size, independent of Marsh.
And you've been in the industry for over 10 years. How long have you been at MMA?
7. It'll be 7 years. Wow, it's not exactly 6.5. So, okay. But rounding up, let's go.
Wonderful. Sure. Well, again, thank you for joining me. I've been asking you to join me on an episode here because, frankly, owner and developers are now seriously having to look at their insurance. It is no longer something that is paid little attention to. It's a big part of many folks' business plans because it has to be. So thank you for joining me. I wanted to start off the conversation perhaps with following up that comment with a look back on 2023 and your thoughts, some trends, perhaps some case studies or anecdotes for some of the folks out there listening or watching. And then perhaps we can jump into what we've seen Q1 of this year and where we see 24 heading.
Sure. Well, first and foremost, the views and experiences here are mine. They're not a Marsh. Comes from 10 years in the industry, but yeah. With that in mind, 2023, yeah, that was rough. The end of 2022 was too, but the positive, one way or another, is that we're actually seeing moderation and hoping for flat as of about 7/1 in terms of rates. Now, I'd love to say that insurance is just the issue as it relates to 2023, but I mean, you had a fair amount of macroeconomic activity as well, whether it was
absolutely
raging inflation, whether it was valuation issues as it relates to the actual assets themselves, or what it took to actually rebuild them. So what you had in some circumstances is, sure, and let me be frank, a 20% increase, which is where we generally saw multifamily properties between 20 and 25% over the last 2 years. That's not nothing.
Yeah.
I don't want to pretend it is. However, we are seeing that actually come back to normal at this point. And by normal, I mean, it's not going down, but it isn't going up any further.
Stabilization, if you will.
Correct.
Okay.
Correct. I will say, and this is just me guessing, for lack of a better term, Ohio has seen the highest level of tornado activity than they ever have in this year.
Yeah, how could you argue that? It almost makes the news on a weekly basis.
It
some
really
location
does.
in Ohio that tornado has hit.
And luckily, I mean, Northeast Ohio, we're blessed to have enough, in my theory, enough elevation changes so that
Mhm.
it doesn't just clear cut through, but not as lucky or luckier than the plain states out west. But at the same time, we're not immune.
Oh
Last
yeah,
year,
we still
we
get some
had
of that flatness, central Ohio,
exactly.
southern. Yeah.
Mhm.
Yeah.
But the reason I bring that up is because we've been insulated forever
Hmm.
as Northeast Ohio. I mean, the only named storm in question, let's call it, that created major issues was Sandy in New York. And that was years ago. And that was more flooding as opposed to anything past that. Well, now that we're actually getting tornado activity and whatnot, I do expect more of a catastrophic concern as it relates to Ohio specifically.
Okay.
Not great news.
Sure.
But at the same time, it's the changing weather pattern. We're hoping that El Nino is gonna this is just the pop of El Nino in the Pacific,
Mm.
taking the actual weather patterns up different than usual. Ideally, it stabilizes next year. But
Sure.
mhm.
Yeah, insurance is always going to be a challenge. It's refreshing to hear that there may be some momentum towards a stabilization of rates.
Mhm.
Mm. Can you expand on what you think is getting us to that?
Sure. I mean, the quick answer is more capacity. And once you reach, I'll say this just from a experience perspective. Ohio is, and there's some in your audience may not love this, but Ohio is not an expensive insurance state. It's actually a relatively cheap one, whether it's on the BWC Ohio Work Comp or it's on the property itself, based on the fact that we have been kind of insulated from a catastrophe perspective.
I did not know that.
Yeah. So what that leads to, unfortunately, is all of these increases were kind of baked in to a certain degree. And I don't want to say baked in terms of, they were always going to happen, but they were kind of an excuse to jump in.
Hmm. Hmm. Hmm.
They're not going to love that. I acknowledge that. But at the same time, Ohio is actually a very substantial state for insurance companies, though, in terms of small regionals. You do have, some north here. I'm going to prevent from saying names in case I say something
Sure.
mean about them later. But at the same time, what that leads to, and this is actually, I think it's fascinating. Feel free to cut this out later if you're so inclined. The reason why we are one of 4 monopolistic states for workers' compensation is because who's lobbying for it? The regional insurance carriers.
Hmm. Hmm.
Not any other business group, not anything past that. They're doing, and mind you, the TPAs are too, but they're doing so because they lose their competitive edge. Because you look at, say, the national carriers and name a commercial and you have one that's not personal, right?
Okay. Sure.
They're literally lobbying because they'll lose the competitive edge of not needing the workers' compensation to actually compete against the national carriers. So it's actually an interesting dynamic from
That
that
is
perspective.
interesting.
But
Wow.
what that leads to as well is all those regional carriers, because there's so much competition, it drives the premium down. Problem is, over the last couple of years, it's been a rough enough market that hasn't really mattered.
Mm,
So
understood. Understood. When we spoke in anticipation preparation for this episode, you were pretty fired up. I think you had just come from a conference.
I did.
Okay.
Mhm.
Can we touch on that? Because
Absolutely.
I had I love how passionate you are about insurance, but I hung up the phone and was like, wow, that guy is fired up.
And you know what? I don't want to say passionate about insurance. I'm passionate about good news.
Hmm,
It's
amen.
not been super for the last little bit. I mean, I don't want to pretend like I've been doomed anything close to it, but at the same time, things have been a little bit more challenging on my side of the fence, as your audience is well aware of as well.
Oh yeah. I mean, I
So
think
when I get news, I'm
go ahead.
sorry, please.
No, no, no. I was
I
just
was
gonna
gonna
say
say,
it's been challenging for all of us. The pat last year was a challenge for everyone in the commercial real estate space. That goes without saying.
definitely,
You know.
definitely.
Yeah.
And what we're seeing is true moderation. We've actually seen decreases in increases, which I understand is not as encouraging as, pure decreases, but
Hmm.
at the same time, it, things have to stop going up eventually. And I think we've finally reached that peak, barring some catastrophic incident. So
Okay.
what that's leading us with is changing the message, changing the situation. We're actually looking at things more from a risk in plain sight perspective,
Hmm.
trying to actually take risk management on. And funny enough, one of the topics that I did bring up with you from the conference was an actual article was released yesterday about it, and it was parking lot fires as it relates to EVs.
Oh,
So
wow.
electric vehicles and having in your parking garage, whether or not you have the fire suppression to actually deal with a electrical fire from a battery on fire. Yeah.
So I was going to back up and I wanted to have you unpack that term, risk in plain sight.
Mhm.
And I'll jump ahead and is the EV charging station an example of that?
Yes. Yes. And I say that specifically because you're going to see more of it.
Oh my,
You'll see
so
more in
many,
plain sight, right? I
so
mean,
many.
it's not going away, the investment's there, but it is changing the risks in question, right? I mean, the fire that could have happened in your parking garage before, maybe some tenant or maybe somebody in question is, dropping a cigarette out the side and there's an
Yeah.
oil leak,
They
and
got a
then
Weber grill in the garage. Yeah, who knows?
exactly,
Yeah,
it's the things you think about. You're like, oh yeah, no, you shouldn't have the grill in the garage, right? Now it's like, oh, well, this thing that is now flooding the market is now, attractive to actually get installed.
absolutely.
Also has issues, and not issues that are debilitating, issues just to be aware of.
Mm-hmm. Mm-hmm.
And I mean, other ones in that same vein, and I don't want to pick on renewables necessarily. I'm pro renewable, right? But
No, but it's new. It's new.
right,
It's a new thing, right?
right.
Yes. Yes.
But take for example, you have a couple of larger property groups that are saying things like, wow, I have a lot of unused real estate on my roof. What if I try and get some energy generation with solar panels?
Mm.
That's great if your roof load can handle snow and solar panels. If you can't, you're popping holes in your roof, and don't.
Yes, precisely. Uh, Sold a deal in Lakewood, Ohio, tail end of 22 that had solar on the roof.
Mhm.
And just from a logistics standpoint of doing any sort of work, and obviously, well, I shouldn't say obviously, this was a flat roof.
Mhm.
But logistically doing any maintenance or work on that roof, let alone the concerns of punctures.
Oh yeah.
Um, we were told there were ballasts on the roof that the panels sat on, but you're not going to tell me there's you haven't punctured the roof at all? Don't buy it. So it was a headache, and stayed in close personal touch with the new owner that we sold the building to, and surprise, surprise, the solar panels are no longer there. And there's a new roof up top.
And that's too bad.
Yeah,
That's too bad.
yeah,
Honestly, you hope it works. You want it to work. I mean, clearly someone invested the time, effort, and energy to actually put it in. But if it's not controlled, if it's not done well, you have issues.
sure, sure.
I
Risk
mean,
in plain sight.
and we're talking about property specifically from that perspective. I mean, there's other ones like technically speaking, and anybody can follow up with me for a contact. I'm happy to do it. I'm going to tell you the guardrails first, but you can actually lease portions of your roof to put a 5G tower on it.
Hmm, hmm.
That's an idea, but be very careful having anybody go near it, because I know that there's conspiracies out there that the 5G tower, emits waves one way, shape, form, or otherwise
Sure.
that are
Heard
negative.
it. Yep.
Well, it's true if you're within like 10 feet. If you're, like if I see a tower over there, I'm not worried about it, right? But if I'm within close enough proximity, it is actually potentially harmful.
So if you have someone living in a penthouse apartment and you put a 5G tower above that unit on the roof, there's
I'm not going to go so far as to go individual anecdote and say, yeah, they're in trouble or anything like that. but
Okay, I'll back off on that one.
I
That is
can
just
see that being the
that's
case.
interesting. No, that is so interesting. Again, risk in plain sight. So again, to unpack it a bit more from a building owner's perspective, this concept of risk in plain sight, like you had said, getting out in front of things.
Mhm.
Um, how does this help them with their insurance? I mean, is it like walk me through how
Sure.
this again identifying risk in plain sight with your carrier can be a net positive.
So let me back up a small amount and remove one word in that statement, and that's
Okay.
the carrier, or one portion of that statement with the carrier, right?
Okay.
You can absolutely include them. It's not discouraged from, I'm not discouraging including them from this at all. However, you don't need them for this, not necessarily. In
Mm,
terms of getting good risk management, good understanding, you want to grab a look at it and have a professional, either a broker, loss control, someone from that perspective, do a
mm,
walkthrough on their own, identify what they can on their own, and then if you're so inclined to, share, please do. The reason and I don't want to be negative towards insurers or anything close to it, but I got to be honest, the vast majority of what I do these days is not talking about insurance policies themselves, right?
mm.
My new joke that I've said way too many times at this point is, but if I spend more than 30 minutes talking about insurance traditionally in a day, I'm having a bad day,
Okay.
right? So from that perspective, most of what I'm doing is looking at a spiral staircase on a tour downtown in one of the newer buildings, right? I'm not a obnoxiously tall person. I'm a little over 6 foot. But if I walk down those stairs and I'm not looking, I'm gonna whack my head on the on the
Mm,
actual stair rung that way.
mhm,
So, can't turn it off. So I'm, in the tour saying, hey, you might want to put some highlighter paints right there just to make sure nobody's hitting their head. So it's not about rocket science saying, we need to make sure this endorsement's here or that. It's about walking through and making sure you have somebody that knows to look out for these sort of things.
mm,
Actually do it.
mm. Yeah, that's a fantastic point. I think we've got a lot of folks that just they sign up the insurance and that's that.
Mhm.
Um, hmm.
Well,
Um,
Peter, something happened, and I think it predates me, to be honest, a fair amount. But something happened in the insurance space where it got truly commoditized. And I'm not
mm,
saying that like it's, the worst thing ever. I don't think it's a good thing for the industry necessarily, just because you are talking about protection. You're not talking about if it was one size fits all, I wouldn't exist. Right. And I'm not saying that like I need to in this space either. I'm just merely stating if you remove specialization, you're not special from an insurance perspective.
mm, mm,
So yeah.
hmm, hmm. Um, let's jump into 2024,
Cool.
and build off perhaps some of the conversations you've been having with colleagues, how things are looking for your world. Again, earlier on in the conversation, you had mentioned stabilization, which I'm sure to most listeners, all listeners, is a breath of fresh air. What else can we discuss? What can owners and operators expect 2024 and perhaps beyond?
I would
I know you
expect.
don't have a crystal ball, Charlie. I know
I
you don't have a
don't.
crystal ball. I wish
Well,
you
I
did.
don't. You know what? I don't know what owners in question. So that I can prognosticate the best I can.
There we are.
In an individual circumstance, but
There we go.
on a broad scale.
Yeah, broadly, absolutely.
Broad scale, I'd say, we're looking back to the normal increases you'd see. Multifamily historically has still been in the, 4 to 10%, depending on the year and depending on the loss history.
Okay.
I think we're well past the 22%. I do think probably low single digits is where we're going to be, low to mid,
Okay.
but this is all kind of hedging off of 7-1 performing well. So we actually do have, and this is not known necessarily or explained often, but there are, renewal cycles within the insurance industry as well. So you have 1-1 is obviously a massive one.
Okay.
Uh, Then you also have 7-1. 7-1 is a lot of municipalities, a lot of government, a lot of, fiscal year ends from that perspective. So I'll, you probably know this, but the government owns a lot of property.
Yeah, sure, sure.
So they have to pay insurance too. And when they pay insurance, that's kind of what we're basing this off of, whether or not 7-1 performs well from that perspective.
Oh, okay. Very interesting.
If it does well, like we're anticipating, then I don't want to say we're back on track, but we are back to getting on track.
Step in the right direction.
Definitely. Definitely.
Wonderful. How are
Mhm.
other asset classes looking? Again, I pick your brain constantly about multifamily, which is my bread and butter, but
Sure.
what there's listeners out there that certainly own other types of asset classes. How are things looking for retail? Is it similar to what we're seeing in multi? Are we seeing some heavy increases year over year in the past few years, or?
Not quite. I mean, there
Okay.
definitely have been increases, don't get me wrong, but they
Mm.
haven't been nearly as dramatic as for multifamily. Multifamily has been, I don't want to call it the problem child, but
The
in
bullseye.
insurance, it tends to be, right?
Yeah.
Um, I, as far as retail is concerned, there have been increases. The increases have predominantly been based off of the increase in property values, right? So
Okay.
the replacement of the building itself has went up. So ultimately, you know, coupling that with rates, and it does hurt more, but
How about office?
it's dramatic.
How about office?
Office is a different conversation for a different reason, sadly, right?
Is it a different
So
episode?
no, it doesn't have to be, because at a certain point, there's not much to say, right?
Mm,
The
mm,
main issue with office is the fact that, and there are vacancy clauses in every insurance policy, right? And the rule typically is, and don't quote me on this because it's not right in front of me and I haven't looked it up, but it's between 10 and 20% by endorsement.
okay.
So if you are north of that, technically speaking, the vacancy clause kicks in and you no longer have coverage for mischief, theft, vandalism, different things like that, because it's basically saying that, hey, this is no longer the idea is it's a moral hazard from
Mm,
that perspective, because you're no longer watching it. You no longer, now we all know that, owners that are lacking 10% to 20% of their tenants, they're doing what they can to get them back.
yes, yes.
Right. So at a
Yes.
certain point, like I disagree with the vacancy condition from that perspective, but it exists basically to avoid nuisances left alone. Right.
I'm sure it
So
exists for a reason.
how that affects office is that there is more vacancy than there ever has been.
Mm, mm.
So um
The
yeah.
office still has a long road from my perspective, from your perspective. It's going to be interesting. Again, being a multifamily guy, what, just turn them into apartments. Well,
What's a floor plate?
yeah, there you go. Thank you. I always say, do you want to live in an apartment that doesn't have any windows?
Uh, how
And they
many
scratch their
offices?
head. And I say, okay, we're done.
Exactly. Okay, let's work the floor plate. Are we gonna plumb through the walls to get extra bathrooms in there? Or are we gonna go underneath? Because either one's not gonna be fun.
Let's talk a little bit of tech. Tech is always
Sure.
fun. I like to pick my guests' brains on some new technologies they may or may not be seeing in their industry. Um,
Definitely.
we can jump into AI if you want. You may be sick and tired of talking about that. There may be nothing to talk about. Uh,
So yeah, we do have our own AI, but I think this is interesting once again. But I also
okay,
think about it liability and risk wise specifically. It's a large data language system. And I'm not a tech guy necessarily from this perspective. So
sure.
if I'm screwing up the language,
They'll let us
the
know.
reason, right? But as a large language model from that perspective, anything that goes in is public, right? So we can't use it, the traditional ChatGPT version, and nobody in insurance should, because then if you put any client data in there, it's no longer safe, right?
Hmm.
So instead, we licensed our own through ChatGPT. My only issue with the entire process is the fact that we named it. I don't want a name for the computer that is spitting out information in me. But it was a clever name at least. It's Len AI, as in like Marsh McLennan. So we call it Lenny.
Okay. Okay.
Yeah.
And this is a customer facing AI, or is this
No,
AI
this
that's
is internal for us
internal?
as of now.
Okay.
As of now, I don't know that we have plans to release it. I know that I know that it's still pretty early for everybody in AI. So
Sure, precisely. Which is just, I mean, I guess fairly impressive that you guys have adapted. A company as large as yours has adapted so quickly in
yeah.
that space, or at least started to adapt or dabble.
So
Is it a part of your day to day at all?
they want it to be.
Interesting.
We
Okay.
have a plugin for Outlook. We have all that stuff where if I want to get something rephrased by a machine, I can do that
Hmm.
personally. I think it loses context. Um, that said, I'm a bit of a micromanager myself. So at a point, like I'm micromanaging a machine that's supposed to do things for me. So good stuff, right?
What other tech items you guys have under your belt to help our customers out there, Charlie?
Sure, sure. So whether it's talking about tech enabled from the carriers on a parametric basis for parametric property coverages, a good example of that, something like a flood flash, which is a newer carrier that sticks a tube outside of your building that collects rainwater and general surface water collection,
Hmm.
and it pays out a claim based off of a predetermined trigger amount, basically the depth of the water collected in the tube.
Wow.
Yeah,
A tube physically attached to the side of an apartment building, if you will. Wow.
an apartment building.
Floodings, we'd mentioned earlier in the pod that we're fairly lucky, and we are lucky here in Northeast Ohio from a natural disaster standpoint. Um,
Definitely.
I think the worst thing we get most years are gray days. Um,
Which are rough on
but
their own.
yes, but flooding is, along with tornadoes, flooding is a very real thing in our region.
Definitely.
And this is something that again can allow you to get out ahead of. Well,
So
how would this work for
basically,
an owner?
basically, take for example, the flood insurance program, NFIP, right? That is a government subsidized program. It is fairly underwater. It has been, that's a pun intended. That's an accident.
Wonderful pun.
My bad. But it's been fiscally underwater for quite some time. It's paying out way more than it takes in. So they've actually tried to rework it a number of times. This
Hmm.
is independent of that. So this is not the traditional NFIP program. This is actually called parametric trigger coverage. So
Okay.
basically what they do is it's not a coverage is determined based off of the trigger itself. That's it. So the trigger depth is what says it. There's no claims underwriting process or anything like that. From that perspective, there is just a, okay, trigger depth met, send money.
So interesting. So from an owner's perspective, would this be more beneficial to someone that is in an area that can flood often?
Yes and no. Because and let me back up a little bit. This type of coverage specifically is for natural water um, accumulation, right? So
Mhm.
freezing pipes, not a thing. This is not going to cover broken pipe in the basement that floods the basement. This is for dam breaks. It overflowed the river, and now I've got 3 feet of water in my shop floor.
Sure. Or just a crazy rainfall.
Crazy rainfall too.
Mhm.
Absolutely. Right.
Okay.
So I mean, that's specifically what this is for. So I put it more towards, if they're in flood zones that are more challenging than other ones.
Mm.
Um, I will say, Ohio is, as much as we do have flooding, we don't really have too much negativity off of it necessarily. Like it's not quite as debilitating as it could be.
Sure. Sure.
With
Yeah, it's a
coastal
basement
places where,
flood. Yeah.
right? Which,
Yeah.
quite frankly, is a little bit amazing when I used to live in Gordon Square in Franklin, right? From my second floor, I was 38 feet above sea level. And I was like, that's not super comfortable. So I mean that was a little wild to me. So it's a little surprising it's not as bad from a flooding perspective, just based off of our elevation. But
True. True. It's so
still,
funny. The insurance guy knows how many feet you are above sea level at your house. I love that.
come on
Wonderful.
now. Let's yeah.
Well, Charlie, this has been good. Any comments as we kind of wrap up the conversation, and whether it's past,
Sure,
present, or future?
sure. So, my best statement to anybody, any owner or otherwise, get out ahead of things. Um,
Mm,
Most of the time, insurance, your agent or broker knows things 60 to 90 days in advance. Sometimes it's longer. If they're not telling you what you should expect 60 to 90 days out, uh, either call them and figure that out or call someone else.
mm, mm, mm.
This type of challenging time is not one to be left for last minute, because last minute, I'll use the phrase, Peter, it's like rearranging deck chairs on the Titanic if you wait for the last minute.
Indeed,
So get
indeed.
out there early, get your controls in place, and it'll be okay.
Wonderful. All right, good. Um, Listeners, Charlie is super accessible on LinkedIn. He's based here in Cleveland as well. I know he and I had met at a NAOP event, so he's always out in the community, a super approachable guy. Whether it's for drinks or for business talk, Charlie is there. So I'll include his full contact information with this episode. Charlie, thanks again for joining me.
Peter, thanks so much. This has been
Yeah,
great.
we had a good time. Thanks.
All right.